Hello, everyone, and welcome to another ASUG Partner Webcast. My name is Maureen McInerney, Partner Marketing Specialist here at ASUG, and I'll be your moderator for this event. I'd like to thank everyone for taking the time to join us today for this presentation. Today's webcast is being recorded. The link to the recording and the accompanied slides will be posted to the ASUG website calendar of events, and all registrants will receive a follow-up email with the link to those materials once the webcast has concluded. I'd like to remind our audience members that you can submit your questions at any time by clicking the purple Q&A button at the bottom of your screen. Today's webcast is Ask a Fixer, Setting Up Transfer Pricing Between Plants, sponsored by ERPfixers. ERPfixers connects you with SAP experts to obtain quality, immediate solutions for your SAP system. ERPfixers consists of thousands of consulting experts in all SAP modules who are ready to help and assist with their knowledge in SAP. Just to let you know, all ASUG members have immediate access to the ERPfixers platform through the ASUG website. Our speaker today is Paul Ovigele. Paul has worked as an ERP financials consultant since 1997 in both North America and Europe, specializing in implementing the SI and CO modules along with their integrated areas for companies in various industries. Paul speaks at numerous SAP conferences, offers strategic and functional level trainings to companies, and is considered one of the leading experts on material ledger. Paul is the author of 100 Things You Should Know About Financial Accounting in SAP, Reconciling COPA to the General Ledger, and Introducing the Material Ledger in S/4HANA. And with that, I'll hand it over to Paul to get us started today.
Thanks, Maureen, and thanks everyone for joining this webcast. As Maureen said, this webcast is on transfer pricing between plants. And the webcast actually mislabeled the webcast a little bit. It's not just within plants, it's also between profit centers and certain other fields that are not just the company code. So we'll talk about what needs to be set up for transfer pricing between profit centers, how standard cost can be calculated for profit center transfer pricing, how transfer pricing postings look in the profit center view, and what are the options to convert to profit center transfer pricing in S/4HANA. So first, what is transfer pricing? It's an agreed-on transactional price between two entities that are involved in a business. Normally, transfer pricing is carried out between different legal entities, like company codes. However, in SAP, not only can you have transfer pricing between legal entities, you can also have them between other entities like profit centers and plants. So what are the prerequisites of transfer pricing? So I don't know who's, the people in this webcast listening that have varying experiences and varying roles in an organization. You might be doing the configuration, you might be a finance user. So I'm going to show some of the settings that have that involve different parties. So the first, from a configuration standpoint, transfer pricing requires a few configuration steps to be carried out. One is to activate a valuation view, a profit center valuation view. So this transfer pricing functionality we're talking about is predominantly part of the profit center valuation view. I've put the transaction there, AKEM. It allows you to activate an extra valuation view in your controlling area. So in this case, we have profit center valuation group currency being activated. And I'll talk a little more about that. The next thing is to activate material ledger. Okay. In order to have this transfer pricing functionality, the only way to do it is to have material ledger. There's no alternative. And just for those who have heard about material ledger, I'm not talking actual costing. If you already have material ledger actual costing, that's fine. But if you don't need actual costing, you don't need to activate it. You just need to activate material ledger. And in fact, one of my motivations to present this webcast, it was part of an exercise we were doing with several companies on how to transition them to S/4HANA. As most of you know, and if you don't know, you should know, material ledger is required for S/4HANA. And I normally get questions like, okay, what do we need to do to accommodate this requirement of material ledger in S/4HANA? And I think although that's a valid question, it's not the right question. The question should be, what can we do now that we know we're going to have material ledger in S/4HANA? And it was from that question we started thinking, okay, a lot of companies may not need actual costing, but they may need a material ledger, or they may need functionality that material ledger can provide, but they never implemented that functionality because they thought, oh, we don't need material ledger. But now that in, I'll say 3-4 years, most SAP companies are going to have material ledger. If you have materials management, you're going to have material ledger. So now what kind of benefit can we have from that? So that's this is one of the benefits, right? So activating material ledger is a benefit. And I'm not saying wait till S/4HANA. I'm saying if you want profit center transfer pricing, why not just activate it now? And there is a conversion. I'll talk about that later. The activating material ledger is one of the requirements, and it's activated on a plant basis. The next one is assigning currency type to material ledger type. That's another configuration setting. It just means that now you've activated profit center valuation, you need to assign profit center valuation to your material ledger. Okay, so just think of it as 3 things. 1, you activate profit center valuation. 2, activate material ledger. 3, assign profit center valuation to material ledger. Okay, I make it sound very easy. It's not that easy. There's a few other nuances to it, but basically that's it. You're just activated a new valuation area. And so if anyone's heard of other things that need to be done for material ledger, that doesn't need to be done. It does not need to be done for this. This is just an activation of the valuation view and the material ledger for your plans. So that's the from a transfer price, from a material ledger and profit center valuation. What are the prerequisites? Now, what actually does need to be set up in the system when you have all that set up? The key configuration is it's a mix of configuration and master data, and I'll point it out where it's config and where it's master data. This transaction AKEZ, called Basic Settings for Transfer Pricing, is where you set up the rules, the conditions, and all the other settings for transfer pricing in the system. And just another thing about this whole transfer pricing thing, I started SAP in the late 90s. I think profit center transfer pricing was already available. However, there's hardly any information out there about profit center transfer pricing. You try Googling profit center transfer pricing in SAP, you'll hardly find anything. It's almost like either nobody uses it or anyone who uses it just doesn't talk about it. It's just it's excellent functionality. I've heard a lot of companies ask, how can we do transfer pricing just between plants or profit centers? But nobody talks about this functionality, about profit center transfer pricing. So the transaction is AKEZ. That's the main configuration. And one thing you'll see about, with this transaction is that a lot of the settings are very similar to SD settings: condition types, access sequences, condition records, pricing procedures. And SAP does a lot of different functionality in different modules, really has the same underlying data structure. So it's similar with transfer pricing, right? It's using those same kind of tables that are used for SD and even for overhead costing sheets and several other things that require conditions and access sequences, right? So you might be familiar with some of the screens that I will show in the next slides. So the first one's condition types. Now, if you know what condition types are, they carry values that are meant to be used for something, maybe for pricing or for percentages or some other type of requirement. In this case, for transfer pricing, there's about three main types of conditions, and I'll go through at least a couple of them here. A base condition type for standard cost and a markup condition type for standard cost. So what's the scenario there? Let's say, for example, you have a profit center, and I'm going to demo this later, but you have a profit center that transfers material to another profit center. and you want that transfer to be done on the markup. So basically, you want the sending profit center or sending plant to make a profit and have revenue generated. As you know, in the standard SAP system, the normal view is that it's not a revenue generating thing unless it crosses over company code. But if you want it to be, and you want it to be based on standard price, you will set up a condition called standard cost. That's the one called TP05. And you'll have a markup condition that adds a percentage to that. Then you'll also set up an access sequence. Again, this is another SD term, right? I say it's an SD term because SD, sales and distribution, uses this functionality heavily for their own requirements. So an access sequence just basically says, what fields are these conditions going to be based on? For profit center transfer pricing, there's a standard access sequence, TP00, but you can create your own. The standard access sequence, and I'll show that when I'm doing the demo, is dependent on several things. One is dependent on material and receiver profit center, or it could be dependent on material alone or material group. And these are in sequence. They take one takes priority over the other. So you actually have to choose what you want your conditions to be based on. Do you want it to be based on material and profit center? Do you want it based on material group? Or if you created your own access sequence, you could pick other fields. And I'll show what fields are available to create an access sequence from. Okay. So that's the access sequence for your condition type. Then the other thing that, again, maybe you're familiar with, this is more from a master data perspective. This is a master data setting, is a condition record. So once you've created your condition type, and you created your base condition, and you created a percentage condition, then you create a condition record. This is what holds the value of the transfer price. So I said, I have a markup condition, which is based on standard cost. That's set up in configuration. Now the master data said, okay, what is that percentage of standard cost that I want my transfer price markup to be based on? And that's what this condition record does. Okay, so as you can see on the screen, it's set up on controlling area and plant, and it tells you enter what material you want that markup to be based on. Again, very similar to SD. I think the SD transaction is VK11, VK12. That's how you create condition records for customer prices. Same thing here, right? Same exact table. The look and feel is exactly the same. A little nuance here is where I show the plant, that's the sending plant. Because here, remember, we're talking about the transfer from one entity to another, one non-company code entity to another. In my case, if I enter a plant, I'm saying that's the sending plant. And for this access sequence, where it says partner profit center, that's the receiving entity's profit center. And then I have something here where I say this is what my percentage is. So with this setting alone, you could have a material in one plant, sending inventory to another plant, which also has a different profit center, meaning this partner profit center. Or it could actually be all in the same plant. So this sending plant, even if the receiving plant was also 1710, if the receiving plant's material had a partner profit center of YB110, that would also generate the markup. So this is not saying, hey, it has to cross over a plant. It depends on your requirements. Because some companies, the transfer price that they want is when it crosses plant, some is when it crosses profit center. So you could have the same plant, but just two different profit centers. Or you could have two different plants, right? Or you could even have the same profit center is in the same plant. There's different flavors of the way you can have this markup to be generated. So I talked about markup, but then you can also have a transfer price set up on a fixed value. So you could say, hey, I don't care about markup. Anytime this plant transfers to this other plant or this other profit center, I want the charge per unit to be a certain value, right? In this case, it's $1.20. So it says if plant 1710, if I transfer material from plant 1710 to a material profit center YB110, charge them $1.20, regardless of what the standard cost is or regardless of any other thing that's in your normal company code view. In my profit center view, I want it to be $1.20. Now, just like in SD, you also need a pricing procedure for transfer pricing. The pricing procedure, it links different conditions together. So I had said that we have a markup condition and we have a base condition. The pricing procedure is what says the markup condition is going to be based on the base condition, right? So that's what I have. You have the TP05 as the base condition, the MU01 as the markup condition, and if you see the from and to in the markup condition, I've said it's from 10 to 10. 10 is the step of the base condition. So anyone who knows about pricing procedure would know this, know how to do this. This is configuration as well. So this will be set up in the background, but it just links your markup with your base condition. Now, as I had mentioned in the previous slides that there are two different transfer price methods we can set up. One is a markup and a base, and the other is just a fixed one. For a fixed transfer price, although I haven't shown this, the pricing procedure doesn't show two lines, it's just one line. It just shows the one line with the fixed transfer price condition. Okay. So now that we've set up some of the basic configuration for standard cost and also for just directly transferring material to material in different profit centers of plants, let's talk about the standard cost part. Now with standard cost, I know not every company uses standard cost, and as you can see, if you don't know already, you don't need to have standard cost to do transfer pricing, right? Standard cost is just one of the ways you can do it because it's easy. If materials are valued at standard cost and you transfer one material in one profit center to another, then it's easy for you to just say standard cost is my base. I want to add 10% on it, and that's the revenue that this transaction is going to have. So we're going to talk about the standard cost method with transfer pricing and how that works. Another thing I want to say with transfer pricing, I keep talking about transferring material, like doing an STO, a material to material transfer, but I mean any transaction that the profit center crosses over. For example, I could produce a material in one profit center or plant, but the materials in my BOM could come from a different profit center or plant. You could also make that constitute a transfer pricing scenario, right? It's up to you. Based on the way you set it up, you could say even when I'm consuming the raw material from another plant, that other plant where the raw material exists should make money from that, okay? So standard cost. So a couple of settings need to be done here. First of all, because we've activated a different valuation view called profit center valuation, it means your standard cost has to have a different valuation view from your normal standard cost. And I'll explain that further later. So two things you need to set up. One, you need a different costing type, right? You probably have a cost, if you use standard costing, you have a costing type right now which helps you calculate standard cost. You need a totally different costing type, right? Because that costing type tells you what valuation view that you're using. If you use standard costing, you go to, I think it's transaction OKKI for the costing type. If you don't have profit center valuation or group valuation, you probably have one that's connected to the legal valuation view. But now we're adding a difference on profit center valuation view. And because we're adding a different costing type, and that's assigned to a costing variant, it means you have a different costing variant for profit center view. And the bad news here, at least I say it's bad news because I know when I've told some people, they say that's bad news, is that means you need multiple costing runs, right? So if you do a costing run every year, or however often you do it, and now you've activated profit center valuation and you want to use transfer pricing, you need to have multiple costing runs, right? So again, depending on how often you update costs, that might be a pain or not. If you do it once a year, I don't think it's a big deal. You do it every month, then maybe a little more of a big deal. But you need to have these multiple costing runs. And it makes sense as well, because we're saying that, whatever your standard price is in your profit center view is different from your legal view. You don't want it to override the legal view. You want that still to remain the same, but you want an extra view. You're opening up an extra view. And I'll show it in the material master, how you can see both views side by side when you're looking at the material master. So when you calculate the standard cost, something I don't think I showed in my previous screens, but when you have profit center view activated, you have the option of saying that any time there is a transfer price being triggered, if someone is doing a transaction that will trigger transfer price, before that transaction shows you the results, I want a pop-up that tells me what the transfer price calculation is. And I'll actually show that in the demo as well. It's called condition analysis. So in my scenario, I've actually activated condition analysis. So if I'm calculating a standard cost and one material is getting a transfer price based on a transfer to another plant or profit center, then it's first going to pop up and tell me this is what's happening. You have a base condition type TD05 that's the standard cost, and you have a markup. And then when I press enter, then it shows me my cost. And I'll show that exactly in a few minutes. All right. So when you calculate your standard price, then your calculation of profit center transfer price is added on top of the standard cost of the standing profit center. So we talked briefly about standard cost. Let's talk about how does transfer pricing posting look in the profit center view. So another configuration step here is setting up these accounts for internal goods movement, right? Again, this is something specific to the profit center transfer pricing. And the reason you need to set it up is because, as I've been saying, profit center pricing is opening a different valuation view, right? But also from a financial statement standpoint, because companies will want to report like a P&L by profit center, it needs to have specific accounts that show you what's going on in the profit center view. This is another thing that if you try to Google this or look for it, nobody talks about. Hardly anyone talks about these movements, maybe because either companies don't really use it or because it's just not enough people know about it. So in this setting up accounts for internal goods movements, this is where you set up, there's 4 accounts I've configured here. 1, internal revenue, change in stock, delivery from profit center, and change in stock on the receiver side. I'll tell you what it means. You actually set these accounts up by material type. The reason why SAP has material type as one of the fields is because, as I said, some companies don't want transfer pricing to happen just for every material. Like you might have, like spare parts or low value raw materials that if they're going across profit center, you don't want to bother with transfer pricing or anything or generating revenue for those kind of postings. So you can specify by material type or valuation class what you want the transfer pricing to trigger. Because remember, transfer pricing is not just saying, hey, this is an extra amount that I'm charging this company, this other entity, but it's also posting, it's also generating postings to your general ledger. Couple of things about this. These postings are only in the profit center view, not in the normal view that you see right now if you don't have transfer pricing. It's in a separate view. Secondly, these are P&L accounts, but they should not be set up as cost elements. I should have put that on this slide, but they shouldn't be set up as cost elements, they're P&L accounts. All right, so let's talk about these accounts. So the internal revenue account, hopefully that's pretty obvious. This is the internal revenue account for the sending profit center. So the sending profit center is the one that gets the revenue, right? It's based on the transfer price amount, so what we configured in one of those tables, multiplied by the quantity that's transferred to the receiving profit center. The next one is change in stock. The change in stock is the internal COGS account for the sending profit center. So think about the sending profit center is trying to make profit. That's what this is all about. So instead of just a straight transfer, we're seeing the sending profit center is generating revenue based on that transfer price, but that revenue has to be compared to the cost of sales, and that cost of sales is the profit center valuation cost in that sending profit center, right? So not the legal cost. So if the profit center cost, which could be the same as the legal cost, but if it's the profit center view of its cost that it's looking at. And again, I'll show you in the demo, I'll show how that looks. How can you see legal view and profit center view differently, and what does that mean? So that's internal revenue change in stock. So think of the first two lines, internal revenue change in stock, as from the sending profit center's perspective. So from the receiving profit center's perspective, look at the third line. So there's an account called delivery from profit center. And so this is kind of like a goods receipt account. It's saying that this is a cost, but it's a cost that I'm getting from another profit center, as opposed to a cost that really means changing inventory. It's called delivery from profit center. So in your profit center P&L, you can clearly see that whatever cost you have there, and that cost is going to be the transfer price multiplied by quantity received, you'll see that that's just because of a delivery from a different profit center. And then the last one is change in stock on the receiver side. This is normally the offset to the delivery from profit center. It's the same amount, right? And the reason for this is that in the receiving profit center, there shouldn't be any profit generated there. The same amount that they got from that, think of it as the same amount that they got from the other profit center, from the sending profit center, should be offset so it shows no profit, right? It just shows that this is a change in stock on the receiver side based on that delivery. Okay, so now I'm going to do a demo of a couple of things with transfer pricing. So it might take a minute or so, but I'm going to do a screen share. Okay, so I just want to confirm with Maureen whether she can see my screen. It tells me everybody can see it. Maureen, can you see my screen?
Yes, I can. You're good to go.
Excellent. All right. So first, let me go to since I've been talking about this 8KEZ transaction. And by the way, this is an S/4HANA system, but the functionality here is the same as our normal ECC system. So a lot of this functionality is similar. So you should be able to see what's in your system. So in here is where I was talking about these condition types and pricing procedures. So for those involved with configuration, this screen, because it looks a little cryptic at first, but it's divided into three sections: condition type, pricing procedure, transfer price variance. The condition type part is where we set up the markup, which was MU01 that you saw, and the base condition, which is the TP05. So if we look at the markup, for example, MU01, right? So the markup condition, it has this TP00 is the access sequence. And that's a standard SAP access sequence. Remember, the access sequence is what tells you what fields do I have available for my conditions to be based on. So let's see what they have. So you have something that says dependent on material and receiver profit center, dependent on material group. Let's just go into this one, dependent on material and profit center. That's the one I showed in the presentation. It shows you the fields of controlling area, plant, material, and partner profit center. If I click on field catalog at the bottom of the screen, it gives me some other fields: division, plant, material group, material type. The reason I'm showing this is to show that you're not just restricted to profit center and plant. You can expand this, well, not too much, but you can expand it to some other fields in the material master that this profit center valuation can be based on. And if you wanted to do that, you'd have to create your own access sequence. So don't use the standard. create your own access sequence, and just have those fields in there. All right. So another thing to show here is this MU1 markup. If we click on records for condition types, and it now takes me into those access sequences, depending on material, receiver, process center, material, and material group. If I hit here, this is where you enter the your condition records. So like I said, think of these as kind of like a master record, right? I enter all my different materials. So like I mentioned before, this is my sending plant. These are the materials that I expect to be transferred across process center. These are the receiving plant's process center. And these are the percentages, okay? And the validity date. Looks exactly like a condition record in SD, right? So that would need to be set up. So I have my base condition, and in fact, I'll click here, and so you have the option of saying base condition type from costing. That's the one I've been talking about. You can have a base condition type from material ledger. You can have a fixed price. Now I have a fixed condition right here, right? So for my fixed condition, again, let's take a look here. And here I'm saying for this sending plant, for all these materials and receiving process center, there's a fixed price, a fixed transfer price that I want to set up. Okay. So when you've done all that, I mentioned to you that for the pricing procedure just now puts everything together. For the fixed price, I have nothing being based on anything else. It's just one line, right? And then for the standard cost markup, that's where I'm saying, hey, TPO, I connect the two together. So anytime my base is posted, they add a markup. And then transfer price variance, I didn't talk about this. These are basically, I believe they're both standard, 000 and PC0. This is where you assign your pricing procedure to the transfer price variance. This is the only way that the system knows you want to use this. Right? So what I have here is the transfer price variance for actual postings is 000. It's a default. It's an SAP standard transfer price. Meaning that anytime I do an actual posting, what we're saying here is, first, the system should go look for this pricing procedure, TP0001. When it goes looks for it, then it's going to say, what's my condition here, FX01, and it's going to trigger that, right? Then it's saying, but if there's nothing in FX01, go look at TP003. It's another transfer price pricing procedure I set up, right? So you can sequence your pricing procedures and give them rankings here to tell the system where to look for your transfer price. Then my transfer price variant PC0 is for my standard price markup, right? So this is not for actual posting. This is only for when I'm doing standard cost calculation. In fact, this transfer price variant PC0 is actually linked to a valuation variant, costing variant, valuation variant somewhere else. I didn't show that config, but you actually have to link it to say, I want to use this transfer price variant anytime I calculate my standard cost, okay? And that just shows the one line. So that's a little bit of the background configuration. So let's go into, let's do a standard cost calculation. So I'm going to put in this material here, and my normal standard cost will be TPC1. In fact, let's do that. That's my legal valuation standard cost, which is $1, right? For my profit center valuation, I'll put a different costing variant. So instead of PPC1, I created one called ZPC2. Let's try it again. Actually, my receiving plant is 1711. So this is now costing this material. Remember when I said I turned on condition analysis? Because I turned on condition analysis, which you don't need to do, I think at least for someone like me, or if you're in IT or you're trying something out, I'd say turn it on because it tells you what's going on. So here it's telling me that for this material raw 100, the standard cost from the sending profit center is $1. The markup is 10 cents. All right? It does that first. And then it's only when you hit the back button that it now goes into the usual screen of the standard cost, which is showing the 110. In fact, you'll see it right here. It shows you that it's giving you where it came from, which is 1710, which is its sending plan, and it adds the profit center the profit center transfer price percentage on top of that. So I've already costed this material, but if we go to the material master and go to the accounting one view, for those who haven't seen it before, in my accounting one view, I have not just the normal standard price, which is this $1 here, but in my case, I actually have 3 valuation views, but I'm going to ignore the group valuation. Let's just look at standard price in company code currency and standard price in profit center, right? So it has the 1 and the 1.10. This also means any goods movement for this material, raw 100, is going to have 2 different views, right? You'll have to click on something, and I'll go to that in a minute, to say, okay, show me in this view or show me in that view, right? So any movement of this material at company code currency, standard price is going to be based on $1. Anything on profit center is based on $1.10. So if you think about that, just from a big picture standpoint, you can create a whole financial statement for your profit center or your plant, in this case, which is based on your company code currency and legal view. And you can create a totally different one for your company code currency in profit center view. Okay. So now let's do something. So we've looked at the standard cost. Let's now look at a goods movement, but we're going to look at a goods movement transfer. So where we're transferring from one material in one plant to a material in a different plant. So I'll put in that same material, raw 100, in plant 1710. That stored location, I'll transfer 10 eaches. I'll take it to 17 in the same stored location. So again, if you notice, this is that material that I had set up, raw 100. I had it set up in my transfer pricing condition record. I had 1710 as the sending plant. I had the profit center of raw 100 as the receiving. And I didn't show that, but you can see that. You can see that in the accounting profit center. Costing one view, I think. Yeah, so you can see that was my receiving cost profit center for that material. All right. So first of all, we'll just do it. So it's 10 eaches for that, and we'll just do a check on that. And then what I want to show after this, so it says okay, is when I click on post, again, because I have told the system that I want condition analysis activated, when I click on post, it jumps here. Now, I can see some of you saying, hey, does that mean every time a user does something, they're going to come up to this screen? And the answer is yes, but you can turn it off. I actually like it because, from an explanation standpoint, just in case you see a price you don't understand, it's like, oh, it's because I have this this transfer price of 1.2, and I'm transferring 10 eaches, that is $12. Okay, and in fact, for those of you who know your way around condition analysis, you know that if you click on this here, it actually tells you, it gives you more detail about the condition, the pricing procedure being used, the condition record. If you open up here, it'll tell you which access sequence, if it's been found, which access sequence was used, right? So it's good analysis just in case, maybe at the beginning, at the start, if you're not quite sure, or when you're testing this out to make sure it all works. I like the condition analysis. And to get out of here, I just click on the back button here. And that should, unless there's an error, which, this is a test system, so there could be, but unless there's an error, this should actually the next thing you should have is just a posting material document posted. And then, so let's see this material document. All right, so we'll take a look at the financial document that was posted. Yeah. Okay, so in the financial document, we can see what you'd normally see with an STO or material-to-material transfer. We debited client 1710 inventory. We credited client 1711 inventory, right? That's what you'd expect to see in a standard STO transfer or material-to-material transfer. It's pure balance sheet to balance sheet. In this case, I think I made it simple. I gave them the same legal standard cost. So it's 10 times 1, 10 each is times $1. I mean, it could be different. You could have a STO variant or something here, but I wanted to keep it simple. Right. So if let's go to general review, and I'm gonna change my currency here to group currency profit center valuation. Same document, but now you see that it looks a little different, right? So you see that you have all these P&L accounts, and if you notice, these are those accounts I showed you in configuration. So first, let's see what's going on with each line here. We still have the first two lines, which is what you saw in legal valuation. And one thing to see here, when I clicked on the display currency, I clicked on group currency profit center valuation, right? Not legal valuation. Because of that, even though the profit center valuation standard cost in plan 1710 is $10, in 1711 it's $11, right? So already there's one difference between the legal view standard and the profit center view standard. Okay. The next, you've noticed that in plan 1710, so we know what this is, we know what that is, right? This is just your inventory transfer at profit center valuation. The third one, internal revenue. This is that revenue that 1710 is getting because of the transfer price of 1.2 multiplied by 10 each, right? So that's 1710's revenue. Then the stock change, if you remember, I talked about, I said that because 1710 needs to make revenue, it needs to make revenue against the cost of sales. Think of this as the profit center cost of sale for the sending profit center or sending plant. So basically, in the profit center view, 1710 has made $2. All right. Then these two accounts here, these two lines, this one and this one are the delivery from profit center I told you about, which is like a goods receipt. It's saying this is what I received from another profit center. And the offset is the PC stock change or inventory change, which, like I said, it's for 1711. And it's meant to be an offset to the delivery because really there should be no impact on profits or P&L for the receiving profit center. And then these next two are just documents splitting zero balancing. And the last one is just because of the difference between the profit center standard cost in 1710 and 1711. So these you probably know about 1, 2, and 3 are probably, for those who do STOs and material-to-material transfer, when the standard cost is different, you're probably used to this AUM account being posted to. It's these ones that are different, right? These are new. These are profit center accounts. They're not cost elements. They show the revenue in the sending profit center. They show the COGS in the sending. They show a delivery from another profit center in the receiving and an offset to that. So again, if you think about it, this a whole P&L can be made from the profit center view. In fact, everything you're seeing here is just the profit center view. If we go back to legal view, you'll see it go back to, what you would consider, maybe a more normal view. In fact, I'll go to the entry view, which is just, hey, 10 to 10. So you see how powerful this thing is and the potential to use this for a totally different valuation of not just your inventory, because as you could see, the inventory was $11 here and not 10. So it's a different inventory valuation, but also it's a different way of having a view which records transfer price which is not even based on company code. Okay. Right. And just probably an obvious thing there, but for me to say this, but all this does not touch the SD module, even though it says standard revenue. It doesn't touch the SD module. It's only in Profit Center, the Profit Center view. Okay, so I'm going to stop sharing now. And this should take us back to the presentation. So now let's see. I have one more slide on the other considerations for creating Profit Center transfer pricing. Now, obviously, we have 1 hour for this webcast. There's only so much I can tell you. I think I've hopefully put as much in as I can tell you within an hour. But there's a lot of other things just to consider, and that's what I have on this slide. So, other things to note about PC transfer pricing. The first is that, I mentioned that this doesn't touch SD. In a way, that's true, right? But if you want, you can set up their standard condition types for Profit Center valuation that are normally in your intercompany pricing procedure already. So if you have an intercompany pricing procedure, I think it's normally ICAA 001 or something. That pricing procedure comes delivered as standard with the Profit Center valuation condition PC00 for revenue. So think about this. This is the revenue from the sending Profit Center, and PCVP, which is the cost of sales for that sending Profit Center. It's automatically there. You don't need to do anything. If you have Profit Center valuation set up, if you do intercompany transfers, and obviously this would be intercompany where it's also going over Profit Center or plant. If you have that set up, these conditions are automatically populated with whatever your Profit Center is. In our case, that $12 or what was it, 1.2 times? Yeah, $12 will automatically be populated in that condition. That's statistical, right? And the same thing with the PCVP. It'll be automatically populated in a sales condition if you want. If you don't want it, you can take it out, but it's there in the standard pricing procedure. Secondly, you can also map those conditions, PC00 and PCVP, to COPA value fields. In COPA, if you use costing-based COPA, you'll see that when you're setting up your operating concern, again, this is for people who do the configuration, there are a couple of buttons that say, do you want Profit Center valuation to be active as well? Right, and if you have that active, you can have these conditions transferred to COPA value fields. The third thing I want to point out is that you can also have production variance accounts set up for Profit Center valuation, right? This is normally the case when, like, you maybe issue a material in one Profit Center to the production order of another Profit Center, and there's a variance because of those differences in Profit Center valuation. When you calculate your normal production variance, it would also show a production variance in your Profit Center view, which is based on your standard, the Profit Center valuation of your standard cost. Another thing, if you do WIP, so WIP is when a production order or process order is not complete. If you do WIP calculation, you're going to need to set up a WIP version for Profit Center valuation, right? That's just a configuration setting. It's actually pretty simple to do it. There's not much to it. It's just because anytime you have a different valuation view, like in this case, I'm proposing Profit Center valuation, you also need to create a different CO version, right? Everyone normally uses CO version 0, right? You might create CO version 1 or CO version 2 or something like that, whatever you want, that represents Profit Center valuation, right? And because you create that CO version, you need to create a WIP version as well. The next thing is the transfer price markup can be based on material ledger price. When I talked about, when you have Profit Center valuation, you definitely need material ledger activated. You don't need to use standard cost. sorry, you don't need to use actual cost, but if you do use actual cost, you can say I want my profit center transfer price markup to be based on the actual cost of the sending profit center. What I showed was based on the standard cost. You can also base it on the actual cost. And that's just a different condition type in that transaction, 8KEZ. Then finally, this was another motivation for me to present this webcast. Right now in S4HANA, because I think anybody who's implementing anything right now, anything in SAP, should think about what the impact is on eventual S4HANA conversion, or if it's been replaced by functionality in S4HANA. The quick reason is because S4HANA has changed so many things in finance, in FI and CO. But if you're going to do anything, you need to watch out for what's coming in the future. And this is really we're talking 3 years, 2-3 years for most companies. Is it compatible? Is it not? Is it going to be phased out with S4HANA or in the head? And you've got to think right now of what that means. So I mentioned this because, like I said, the first justification here for this was everyone's going to be on Material Ledger anyway. So might as well take advantage of something Material Ledger delivers as standard, right? Then the second thing is that right now, if you go to S4HANA, you can't go on S4HANA and then convert to Process and Evaluation. SAP doesn't currently have a conversion program to Process and Evaluation S4HANA. So if you're going to do it, you have to do it in ECC first. If you were going to convert to PC Evaluation. Now, I'm sure in the future, they'll come out with, they're constantly coming out with improvements. I'm sure they will, but right now, if you wanted to use PC Evaluation, you would convert first, use it in ECC, and then when you go to S4HANA, it's part of your conversion. For those who don't know, the extra valuation piece of S4HANA was pretty difficult for SAP to bring. It was difficult. In fact, the first time SAP came out with S4, you couldn't convert the extra valuation views. It came out with a later release. So they're still working things out with that whole process. So there's no program to convert. You need to do it before. Just one last thing to say about Material Ledger. Okay, I've made it look a little simple that if you don't have Material Ledger, all you need to do is just activate a few things. That's not the case. If you don't have Material Ledger right now and you want to go on Material Ledger, even if you don't want to do actual costing, you need to convert the tables in your inventory, the data in your inventory evaluation tables need to be replicated in the Material Ledger table, and that is like a mini project, right? It could take a couple of months or so to validate and sanitize the data and move them over to Material Ledger and then activate Material Ledger. So that also needs to be considered. But still, considering the benefit that you get from this as well as other things, I think it's definitely something worth considering. All right, so the last slide, I'm going to hand over back to Maureen, and she's going to read any questions we have, and I will answer as many as I can right now. But for anyone who's attended our webcast, we make sure we answer every single question. You just look on the ERPfixers resources, you see a past webcast, every single question asked is going to be answered and emailed to the attendees. So thank you very much, and I'll hand back to Maureen.
Thanks, Paul. As you mentioned, we are now moving on. So if you do have a question, you can still enter that in now using the purple Q&A button. Paul, you do have quite a few. So as you said, I know you'll get back to those people if we don't reach all of the questions today. But first question, is profit center valuation affected by profit center reorganization?
Right. So profit center reorganization is almost like a system landscape transformation tool that allows you to change, delete, merge, separate profit centers due to change in business circumstances. So there is a relationship because if for companies that want to implement profit center valuation, you may not be happy with your current profit center structure, and you may need to first reorganize the profit center structure before doing profit center evaluation. And one thing I want to note about that is that profit center reorganization is only available if you have the new GL or something, or a more recent version of the general ledger. The classic P&L doesn't have profit center reorg. So to summarize, there's no direct relationship between profit center valuation, profit center reorg, but doing profit center reorg could help structure your profit centers and set you very, very well for profit center valuation.
Thank you. The next question, what are the differences in profit center transfer pricing with S/4HANA?
Good question. The simple answer is not much. The simple answer is all the functionality I talked about now is available in S/4HANA. In fact, if you didn't catch it, I was demoing in an S/4HANA system, right? All that functionality is the same. If you were comparing notes between what I was demoing and your own system, you'll see a lot of it is the same. But S/4HANA has some other things that are added to this functionality. For example, with S/4HANA, you have ledger-based valuation. In ECC, if you have a legal view, a profit center view, a group view, they're all in one ledger, right? Meaning that if you report by your main ledger, right, which is what most people have, you can see all three views. With S/4HANA, you can have a view specific to profit center valuation. You can have my profit center valuation ledger, my legal ledger, and my group ledger, right? So S/4HANA has brought out what's called single valuation ledger, which makes things pretty clean if you want to do things that way. I'm kind of 50-50 about that because I think, more ledgers, that means more month-end processes and more stuff to catch up with. I like the multi-valuation view ledger better right now, but I like the fact that you have the option for a single valuation ledger as well.
Thank you. The next question, can profit center and company code transfer pricing work together?
The answer is yes. In fact, when you saw the pricing for what did I show? In one of my comments, I talked about the transfer price conditions PC00 and PCVP being in the intercompany pricing procedure. That's almost an indication that you could have an intercompany transfer which also crosses over profit centers, right? So and in the different views, you'll get the information you need. And specifically what that means, when you have intercompany means you want a transfer price, but you also want to look at it from a group perspective. And the group perspective eliminates that transfer price, right? That's called the group view or group valuation, right? The profit center view is almost a flip. The profit center says, although you're not different companies, but because you're different profit centers, then you want to add a transfer price. So if you do an intercompany transfer, you look in the group view, you're going to see no transfer price. You look in the profit center view, you'll see a profit center transfer price. But they're both in separate views, same transaction, so you can get the best of both worlds.
Thanks, Paul. That does look like all the time we have today for questions, but as you said before, we will follow up with you after the webcast. But I want to hand it back to you, Paul, for any final remarks before we close the webcast today.
I just want to say thank you for attending the webcast. Thanks, Maureen and ASUG, and thanks for everyone for attending. And we're trying to add a lot of value to the space of FICO and other modules and how to transition companies from where they are to S/4HANA. If you take a look at our resources page at ERPfixers.com, I think you'll see a lot of good information there. We schedule at least monthly webcasts with ASUG, so look out for our next one, which is in March. And if there's any questions, you can email us at info@ERPfixers.com. Thank you.
Thank you again, Paul, for a great webcast. On behalf of ASUG, I'd like to thank ERPfixers as well as everyone who took the time today to attend this webcast. If we didn't get a chance to answer your question, Paul will follow up with you after the webcast concludes. Before we go, though, I'd like to leave you some quick information on ASUG for anyone unfamiliar with our user group. ASUG helps connect SAP customers to the people and information they need to maximize their investment in SAP. If you'd like to speak to someone about becoming a member of ASUG, please message info@asug.com. As mentioned before, the recording and slides from today's program will be posted to the ASUG website, and all registrants will receive a follow-up email. Please take a moment to complete the survey by clicking on the green button at the bottom of your screen. And with that, I'd like to close today's webcast. Have a great day, everyone.